guys, welcome back to our channel. This is Jerwin.
This is Elma.
And Chopal. We're two Asians and a dog. This year has been crazy. If you have been watching the stock market, then you know that the market has been going up and down in response to everything surrounding the COVID-19 pandemic. So, should you invest in the stock market in 2020? Today, we will go over why you should invest in the stock market in 2020 and why we are investing in 2020 and beyond. Our channel is about sharing our journey to 8/12/2024, which is our retirement date.
We'll go over real estate investing, stock market investing, financial education, and some of our travels. So join us to our journey to 8/12/2024. Also, make sure you stay till the end for Chopal's tip of the week.
Let's start with knowing your time frame. For us being in our mid-30s, hopefully we have many more years to live, but currently you need to be 59 and a half to take out money from your retirement account without penalty. Withdrawing before then without any special circumstance means you will be paying a 10% early withdrawal penalty plus your tax bracket, which means you could be taxed over 25% or more if you decide to take out your funds early. Knowing all this means we have 25 plus years until we have access to our funds without being penalized. Now, technically, you're not supposed to guarantee anything when it comes to investing, but I can guarantee that our account in 25 years will be higher than they are today.
While working at JPMorgan Chase, I spoke with many retirees, and most have said that just because you have access to your account at 59 and a half doesn't mean you will actually use it. Most people actually waited a lot longer to tap into it. The many clients I spoke to started tapping into the retirement accounts around 70 years old. Those that did retire early had some liquid assets built up, so they didn't have to tap into the retirement accounts right away. Now, let's say it's not a retirement account you're planning on using to invest in the stock market. Investing in a non-retirement account just means you have access to the funds without having to wait until 59 years old or 59 and a half. Of course, any growth that account has, your Uncle Sam will want his share as well. Just like in real estate, the more time you have to invest, the better. Knowing your time frame will dictate how you invest in the stock market. Again, just like in real estate, if you have plans on investing for 1 or 2 years, you may want to consider other options. Or be more conservative if you do invest in the stock market. If you have, say, 5, 10, 20 years, then don't be afraid to be more aggressive on your investment portfolio. One of the biggest mistakes people make, other than not investing of course, is actually investing too conservatively, especially knowing that they have a longer time horizon.
Now, this is difficult to explain, but most of you that already invest will understand this. Usually when you put money into your brokerage to invest in stocks, mutual funds, or ETFs and others, it becomes difficult to take it out, not because of the platform or the process, but because of your mindset. A lot of investors start to feel that once their funds is inside a brokerage account, they mentally can't take it out.
Moving on to timing the market. There aren't too many people that can successfully time the market and get it right every single time. Yeah, sure, there are a handful of people that succeeded and maybe made a boatload of money at timing the market. However, for a majority of us, this will not be the case. Some people have been saying the market was going to take a huge drop, and some of those people have been saying it since 2012. Imagine if you listened and didn't invest for the past 8 years. You would have missed out on over 95% of growth. Shocking, right? This year alone, the market has had tremendous lows and tremendous highs. March this year, 2020, was a month to forget if you were invested in the market. All in 1 month. March, we saw one of the largest one-day drop in history, about 13%. And in the same month, still March, one of the biggest one-day gain ever at 11%. So if someone tells you they can time the market, ask them what they have been smoking.
Okay, so historically the stock market is positive 7 out of 10 years, which means you will go through some negative years. However, you're more likely to have positive returns overall. Fear and lack of knowledge is probably the two most common things that sway people to not invest in the stock market. We completely understand both, and we have personally experienced both fear and not knowing what we don't know. We have been able to overcome the fear by educating ourselves. Even before Jerwin started working at JP Morgan, we just started reading more financial books and articles. We even subscribed to the Money magazine.
Speaking of subscribing, make sure you guys subscribe to our channel, Two Asians and a Dog. Like what I was saying, we focus all of our extra energy on learning. Learning was easy for us because we wanted to learn. Our hopes for this channel is to share with you guys what we have learned and how you can take the fear out of the equations so you can make your money work for you.
Another obstacle we hear a lot of people saying is, I don't want to lose money, that's why I don't invest in the stock market. Foolishly, they don't realize that by not investing in the market, you are guaranteed that you are losing money. Inflation on average is 2 to 3% every year. Inflation is defined as a general increase in prices and fall in the purchasing value of money. This means that if you have $100 today and it's currently invested in a regular savings account, earning you a whopping 0.001%, that same $100 10 years from now won't be able to purchase something that's worth $100. Investing your money in an account that provides less than 2% return will not allow you to keep up with inflation. Not only is your purchasing power reduced, but you would also be losing money. It's not about timing the market, it's time in the market. A famous quote by Ann Wilson. This quote should resonate with you today and forever. When people ask, when is the best time to invest in the market? Our answer is yesterday. Now, don't get us wrong, we are fully aware of what the trends are and stay up to date with what is going on in the market. And we have been guilty of trying to even time the market.
One example is when I wanted to buy Tesla several years ago at $100 or at 117. I waited and waited thinking it would fall below $100. Well, I was wrong, and a few years later, we ended up buying it at $269. I'm sure that if you guys are aware of what's going on with Tesla the past 15 months, it's been growing like crazy. So now with the growth we made from Tesla, we can probably buy a Tesla Model S. Always remember that quote though, it's not about timing the market, it's time in the market. To answer the question, should you invest in the stock market in 2020? For us, we will be investing for the rest of the year. We're investing for the long term, and investing in the stock market is part of our plan. We plan to invest regularly and in equal amounts to take advantage by buying during the dips, while also trying to avoid timing the market. There's a good chance that the market may drop in the next few months. Investing means we can hopefully buy at a discount. But if the market stays steady, we're okay with that as well because we know we're in it for the long term. Our accounts will be higher today, 2020. Let us know what you're planning on doing for the rest of 2020.
Oh, one last thing. We will actually be sharing one of our investment accounts in the very near future. So stay tuned so you can see how we invest part of our portfolio. We will be doing a quarterly update so we can share with you our journey. The account we choose will primarily go over dividend stocks, so make sure you subscribe to be notified when those videos come out. All right, so that is everything we have for you guys today. If you enjoyed watching this video and you found value in it, please don't forget to hit that thumbs up button and subscribe to see more videos on personal finance, real estate, and stock market investing. Now it's time for Tip of the Week.
Tip of the week. To learn more about dividend stock investing, follow Slave to Investing on IG. And while you're there, make sure you follow Showpal as well. Two Asians and a dog.